1. Australia faces 10% import tax amid Trump's trade tensions. 2. Australia's tariff win, why removing nuisance tariffs beats Trump's trade war. 3. How Trump's tariffs could positively impact the Australian economy. 1. Australia faces 10% import tax amid Trump's trade tensions. Australia's struggle to win favor with the Trump administration has resulted in a tough pill to swallow, a 10% import tax that has ignited sharp criticism at home. But here's where it gets controversial. While many of Australia's closest allies are hit with tariffs soaring as high as 40%, Australia manages to avoid the harshest penalties, yet still faces a significant financial burden. This situation raises important questions about the effectiveness of Australia's diplomatic efforts and the broader implications for its exporters. In the latest wave of U.S. tariffs, Australia narrowly escaped the steepest charges, but starting next month, a universal 10% import tax will be imposed. This move has sparked debate within Australia about whether the government's approach to negotiations with Washington has been strong enough. President Donald Trump's administration has sent formal warnings to countries that failed to secure new trade agreements before the August 1 deadline. Notably, major allies such as Japan and South Korea have received these letters and are now subject to tariffs reaching up to 40% on certain goods. Interestingly, Australia did not receive such a letter, signaling it was not targeted for the highest level of penalties. However, it was not granted any special exemption either. Instead, Australia remains under the baseline 10% tariff introduced in April, which is part of Trump's broader strategy to enforce reciprocal trade relationships, essentially pushing for equal treatment in trade deals. Opposition finance spokesman James Patterson expressed frustration, stating, "The only fair tariff on Australia would be 0%, and I hope that's what we get. But we haven't given ourselves the best chance because the Prime Minister has not even met President Trump, now 7 months after he was elected." Patterson highlighted the United Kingdom as a contrasting example, where Prime Minister Keir Starmer has successfully negotiated reductions in automobile tariffs and improved terms for steel and aluminum exports. Meanwhile, Australia's steel and aluminum exports to the US are now burdened with a hefty 50% duty, a stark contrast that fuels domestic criticism. Prime Minister Anthony Albanese defended the government's stance, emphasizing that despite the new 10% tariff, Australia still enjoys one of the most favorable tariff arrangements globally. Speaking from Hobart, Albanese remarked, "No country has a better deal than Australia. Tariffs are a penalty on the country that is imposing them, and will continue to argue for reciprocal tariffs, which are zero." Assistant Treasurer Dan Mulino offered a more optimistic perspective, suggesting that Australia might actually benefit as companies from countries facing higher tariffs look to redirect their exports. "If we're lower than other countries, that might present opportunities for us to increase our trade with the US, he explained. However, industry groups and economists warn that even a seemingly modest 10% tariff can have a significant impact, especially on small businesses in sectors like agriculture and metals. One trade analyst told CNN, "These tariffs may look small on paper, but for a small business shipping steel or beef to the US, 10% can be the difference between profit and loss." Australia stands among a select few nations spared from the highest tiers of Trump's global tariff reshuffle. Yet, with the August 1 deadline looming and no direct negotiations with Washington currently underway, pressure is mounting on Canberra to re-engage diplomatically. This urgency is underscored as Prime Minister Albanese prepares to visit China this week, aiming to strengthen other trade partnerships amid the ongoing challenges with the US. So, what do you think? Has Australia's government done enough to protect its exporters, or is it time for a more aggressive diplomatic approach? Could the 10% tariff be a strategic opportunity in disguise, or is it a warning sign of tougher trade battles ahead? Share your thoughts and join the conversation below. 2. Australia's tariff win, why removing nuisance tariffs beats Trump's trade war. Australia stands at a critical crossroads in its trade policy, with the Productivity Commission urging the nation to rethink tariffs amid ongoing tensions sparked by Donald Trump's extended US tariff deadlines. But here's where it gets controversial. While many expect tariffs to harm Australia, the Commission's analysis suggests the opposite. If Australia chooses not to retaliate, it could actually benefit economically. This challenges the common instinct to respond in kind and opens a debate on the best path forward. In its latest annual Trade and Assistance Review, the Productivity Commission presents detailed economic modeling showing that the tariffs introduced by former U.S. President Donald Trump, dubbed Liberation Day tariffs, along with specific levies on aluminium, steel, and automotive parts, might boost Australia's real gross domestic product, GDP, by approximately 0.37%. This seemingly counterintuitive outcome arises because capital that leaves the U.S. due to these tariffs tends to flow into other countries, including Australia, thereby increasing investment and production capacity here. Alex Robson, the deputy chair of the Productivity Commission, explained this dynamic during an interview on Radio National Breakfast. He noted, capital outflow from the United States has to find new destinations, and Australia is one of those beneficiaries. Over time, this inflow of capital enhances our production capabilities, leading to a modest but positive impact on our GDP. One reason Australia stands to gain more than others is its relatively low tariff rate imposed by the US, around 10%, compared to much higher rates faced by other countries. This lower tariff burden means Australia is in a relatively advantageous position, Robson added, highlighting how tariff disparities can shift trade dynamics. However, the situation remains fluid and fraught with risks. Recently, President Trump signed an executive order delaying the start of these tariffs from July 9 to August 1, allowing more time for negotiations with affected nations. Trump has been actively communicating with global leaders via his Truth Social platform, warning that unless trade deals are reached, tariffs of up to 25% could be imposed on major trading partners like Japan and South Korea, with Indonesia facing a 32% tariff on its exports to the U.S. Paul Ashworth, chief North America economist at Capital Economics, downplays the potential economic shock within the U.S. if these tariffs take effect. He points out that even if no preliminary trade deals are struck and tariffs rise from 15.5% to 17.3%, the impact on U.S. consumer prices has been surprisingly muted so far. Moreover, tariff revenues are being recycled back into the economy through recent Republican-led legislation, which could help cushion any negative effects. But here's the part most people miss: the real danger lies not in the tariffs themselves, but in the possibility of escalating retaliation. Professor Robson warns that if countries begin imposing tariffs on each other in response, the resulting trade wars could severely disrupt global markets and harm Australia's economy. The uncertainty and risk of tit-for-tat tariffs create a volatile environment that could spiral out of control, he cautioned. Instead of engaging in retaliatory measures, the Productivity Commission recommends that Australia take a proactive stance by removing its own remaining tariffs, many of which are considered nuisance tariffs. These tariffs generate minimal revenue but impose significant compliance costs on businesses, estimated between $1.3 billion and $4 billion for the 2023-24 period, while only bringing in about $2 billion in revenue. Last year, the government eliminated 457 such tariffs, and the Commission suggests hundreds more could be removed to improve economic efficiency. Robson emphasized, these tariffs cost the economy roughly twice what they raise in revenue and don't effectively protect any domestic industries. Removing them would make Australia better off. Currently, about 90% of imports enter Australia tariff-free, with the remaining imports facing an average tariff of around 5%. The Commission argues that maintaining these tariffs is more costly than beneficial, especially when they do not serve to shield local industries from competition. On another front, the Productivity Commission advises caution regarding the Albanese government's flagship Future Made in Australia program, which aims to support domestic industries through budgetary assistance. While such industry policies are common internationally, mirroring initiatives like the European Green Deal, Canada's Made in Canada Plan, China's industrial subsidies, and the U.S. Inflation Reduction Act, they carry risks if not carefully designed. The Commission's report highlights that poorly crafted industry support can become expensive for governments, act as disguised trade protectionism, and distort how resources are allocated within the economy. It stresses the importance of transparency, ongoing evaluation, and clear exit strategies to ensure these programs deliver real value. Professor Robson acknowledged the government's legitimate goals of enhancing supply chain resilience and advancing the transition to net zero emissions. However, he also noted that it remains uncertain whether the benefits of the future Made in Australia spending will outweigh the costs. The government has established a framework to assess this, which is a positive step, he said, but only time will tell if the investments pay off as intended. This complex interplay of tariffs, trade negotiations, and domestic industry support raises important questions. Should Australia continue to avoid retaliatory tariffs even if it means accepting some short-term disadvantages? Is unilateral tariff removal the best strategy to boost economic efficiency? And how can the government balance industry assistance with the risks of protectionism? We invite you to share your thoughts. Do you agree with the Productivity Commission's recommendations, or do you believe a more aggressive trade stance is necessary? Could the Future Made in Australia program be a game changer, or is it a costly gamble? Join the conversation and let us know your perspective. 3. How Trump's tariffs could positively impact the Australian economy. Hold on to your hats, Trump's trade war might actually give Australia a tiny economic boost. That's the eyebrow-raising conclusion from Australia's Productivity Commission. While the world braces for chaos from new U.S. tariffs, experts reveal Australia could emerge surprisingly unscathed, and maybe even slightly better off. But here's where it gets controversial: this silver lining depends entirely on Australia not retaliating with tariffs of its own. Let me unpack this twist. The drama escalated when President Trump posted tariff letters targeting countries like Japan and South Korea with steep 25% duties, though he extended the negotiation deadline to August 1. Amid global uncertainty, Professor Warwick McKibben, a top economist modeling trade impacts, dropped a reassuring bombshell: Australia's in probably the best position to handle this. His reasoning? We should see these disruptions as an opportunity to turbocharge trade deals with other partners and slash our own trade barriers. Think of it as a chance to become the go-to trader while others are distracted. Now, here's the real shocker: the Productivity Commission's analysis actually predicts a small, positive effect on Australia's economy. Why? Two clever mechanisms kick in: 1, goods originally bound for the U.S. flood into Australia at bargain prices, and 2, investment money fleeing tariff-heavy nations could land in our backyard. Imagine Australian businesses snapping up cheap steel or tech components, while global investors park funds in our stable economy, a classic case of someone else's trade war, our gain. But wait, and this is the part most people miss: Deputy Chair Alex Robson urgently tempers this optimism. That projected 0.4% GDP bump. It doesn't include the dangerous domino effects of global uncertainty. Robson warns, the proposed tariffs are likely to have a relatively small direct effect on us, but the global uncertainty they've brought about could affect living standards. Translation: cheaper goods today might mean economic headaches tomorrow if worldwide trade shrivels. The political showdown here is explosive. Treasurer Jim Chalmers triumphantly cites the report to defend the government's "keep calm and trade freely" strategy. But opposition finance spokesman James Patterson fires back with this singer: the only fair tariff on Australia would be 0%. We haven't given ourselves the best chance because the Prime Minister hasn't even met Trump. Ouch. This exposes the raw nerve: is diplomatic silence smart restraint or dangerous neglect? Meanwhile, NAB's Tapas Strickland decodes Trump's tariff patterns. Countries where the U.S. runs trade deficits, like Vietnam, face 20% duties, while those with U.S. surpluses get 10%. If this holds, tariffs could ultimately hit harder than expected. So here's the million-dollar question: is Australia truly playing this smart, or are we underestimating the global fallout? What's your take: savvy strategy or risky gamble? Sound off below.